Fundamentally, crypto isn't that complicated. It's all just capital rotation based on attention. Is there currently a lot of attention on asset A or asset B? That's where the money is flowing, and currently it's flowing into Floki Inu. The question is, how much longer can this rally last? Let's have a look at relative valuation charts. Let's have a look at the data most people are not considering. Memecoin trading is all about risk versus reward. And the nice thing about Floki Inu is that the market cap is still just at 1.3 billion. And there are many other meme coins that are way larger than that. Bonk is at 3 billion, Pepe is at almost 6 billion. And then of course we've got the leader with 32 billion, that's Dogecoin. And so here's the mistake that most people make. Most people just look at US dollar charts, they try to find out where's the price going. They even look at this on a linear scale. And with this kind of chart, we can't really get any real information, right? What would imply that recently Floki Inu suddenly appreciates again? Who could have seen this based on this chart? It's pretty much impossible. It's like looking at a similar chart for Dogecoin and try to find out when does it pump, when does it dump. There is actually a connection that gives us an idea when capital might rotate into a certain altcoin. So let's start with Dogecoin, right? This is just Dogecoin in US dollars on a linear scale. On a logarithmic scale, this already looks a bit better. So now the horizontal differences and the percentage changes are constant, right? Independent of where the price is. If the delta in the vertical distance is the same, the percentage change also is constant. But we've started this idea that crypto is a game of capital rotation, right? There is a pool of capital, it moves to asset A and asset B. Thus, relative performance or outperformances is actually the constant. This here now is Dogecoin dominance. We go back to Floki Inu in a second. And have a look at this now. Suddenly, the floors and the tops, they align much, much better. Who would have thought that Dogecoin tops out in the middle of November of last year when the price was at 47 cents, when in the past it peaked close to 70 cents. People that looked at the Dogecoin dominance could see that coming. We actually talked about this at the time. Feel free to check out the old Dogecoin videos on this channel. And this also then tells us when potentially the price might bottom. Now, a very similar chart to the Dogecoin dominance chart is Dogecoin relative to Bitcoin. Again, the bottoms tend to align quite well. And it gives us an idea when to potentially get in. And still Dogecoin relative to Bitcoin is on a rather low level. Now let's have a look at Floki Inu. This is Floki Inu relative to Bitcoin. We've got a floor around here. We've got a potential top over here and maybe over here as well. For smaller pumps in the past, we also saw a resistance at our current price level. Still, Floki Inu has the potential to outperform Bitcoin by another 150%, potentially even 300%. That's at least the volatility that we saw in the past. Now, why am I comparing Dogecoin and Floki Inu that much in this video? It's because there are many similarities between the two assets. Both of them are the OG meme coins. Both of them started out with just community holdings, and then over time the supply gradually moved towards the centralized exchanges that then create those pumps and dumps through short-term leverage, through the perpetual futures. Let's compare Floki Inu with Dogecoin. That's this chart over here. It's the Floki Inu price relative to the Dogecoin price. And I have drawn those lines a long time ago. And this chart implies much more upside potential for Floki Inu than for Dogecoin. An outperformance of 130%, potentially again more than 300%. Now, I was actually betting on that outperformance, and that was over here where this red little circle is. Unfortunately, I got a bit too impatient. I did sell before the rally. Have a look at this. This is a post in the premium membership on the 13th of May. I'm opening a Floki to Doge relative valuation bet exactly at that point where this red dot over here is. Since then, the price went up by more than 30%. I do believe there's a good chance we continue to rise in Floki Inu relative to Doge with this rally. I don't think this rally has finished. But again, unfortunately, I'm not in the position anymore. I'm currently doing more relative valuation bets to Bitcoin, Ethereum, and Solana, not within a crypto category. But obviously, this approach can also work if you've got the patience, right? If you can wait for those squeezes. And currently, it seems like a squeeze is happening. The majority of perpetual futures traders are still betting on rising prices of Floki Inu. So the longs have to pay the shorts in order to get long exposure. Some shorts are getting liquidated, but so are the longs. So we are in an equilibrium. But clearly, the open interest is spiking. So there's now 80 million worth of bets on the Floki Inu price. And there is some correlation between the spot price and Floki Inu, right? When there's not any additional leverage entering the token, we might just bounce off that resistance over here. And so I believe the best approach is to use a trailing stop loss now. So in case we do see a continued rally of Floki Inu, simply adjust the stop loss. Then in case it turns around, we exit very, very quickly. But as the price rises, we just go higher and higher and then lock in the price with the profits before the turnaround. Because of course, at some point, attention will move to the next meme coin again. It's all just a game of capital rotation. Sometimes it's asset A, sometimes asset B that's outperforming. It's not just a buy and hold game anymore. That works for Bitcoin. It doesn't work for the meme coins. Now, I do have an announcement to make. I always talk about how to bet on relative valuations, right? How some altcoins might outperform or underperform Bitcoin and Ethereum, and how those relative valuations aren't that volatile, right? We tend to see relatively clear trends, and how there's quite a bit of alpha to be made with this, right? We can outperform using those clear trends. The only issue is that for most people, this is a bit too complicated, right? You have to learn the platform, you have to learn risk management, how to adjust stop losses, etc. And so here's now the big announcement. I have launched for a small number of people to just deposit capital into a capital pool and then automatically copy trade whatever I do. The launch happened 24 hours ago for the annual subscribers of premium of this channel. And it's already going well. Of course, there might be some volatility to the downside, but currently we are 1.7% already in profit. Before that launch, I tried this out myself on a personal account. So I started with 40K, moved this to 60K within 2.5 months. And while I don't expect to get the same kinds of returns when moving more capital and when maybe luck isn't that much on our side, I still believe that the strategies we are using will yield long-term risk-adjusted positive returns. So in the early days, I did this all with borrowing and lending platforms with DeFi. Now I moved to perpetual futures, right? Bets on the price. But this relative valuation bet approach, I already do this for almost 4 years. So that's what this chart is showing, right? If I just dollar cost averaged into Bitcoin, I would have gotten this light gray line as return. But instead, I got the black line in return. And here is how I do this. I check for altcoins that have a quickly rising supply, while the demand doesn't grow at the same rate. So this is the example of Balancer. I show this very often here publicly on this channel as well. Of course, there are way more examples that I share in the closed community. But because of that token inflation, relative valuations tend to go up very, very steeply. So this is now Ethereum relative to Balancer. So we go short Balancer, or we borrow the Balancer token, right? We profit when Balancer goes down, and we go long the thing that we believe will outperform. And then we get a chart like this. It's a strategy that works for many altcoins. Just have a look at the overall altcoin unlocks over time. So how much new supply hits the market and how much capital needs to flow into the market just to keep prices stable. This here is weekly unlocks, and it tends to be in the hundreds of millions of dollars every week. Especially this week is extremely aggressive with unlocks. And so this is the return we get, but that happens because this is the actual performance of the altcoin. And this is a chart we see very, very often. Just have a look at your favorite altcoin with high unlocks relative to Bitcoin, relative to Ethereum, and you're likely going to see a chart that goes down quite consistently. Who's getting all the tokens? Who's benefiting from this? It's the founders, it's the contributors, it's the early investors. They are all dumping on retail. So when you're wondering why your altcoin portfolio tends to underperform Bitcoin all the time, it's because of that, right? It's because all those people dump on you regularly. And so that's how we make money as well. We make money when the insiders dump on retail, and most retail investors don't know how to play the game. I made a lot of tutorial videos on the topic, how to bet on relative valuations with perpetual futures, how to do proper risk management with those bets. And then also, and this is the big thing, right? How to provide capital to a capital pool so that every trade that I make automatically gets copied with your funds as well. So that something like this isn't theory, but actually becomes practice for yourself as well. You don't have to necessarily go through all of those tutorial videos and have to do active trading all the time if you don't have the time. If you do want to trade yourself, there is obviously the offer, because I do share my trades in real time as well, right? For example, here, this is the balancer short that I announced on the 19th of July of last year. So that was over here. Since then, balancer outperformed Ethereum by more than 116%. And so if you've got some capital, but also some time, then there's the monthly membership, right? You just sign up, you watch a few tutorial videos, and then you can copy trade whatever I do. And of course, also do additional trades besides that. If you don't have much time though, if you cannot do the active trading yourself and you're busy with maybe managing a business or a very busy job, you've got the capital, you don't have the time, then you can also automatically copy trade me. The automatic copy trading feature is available for the annual subscribers. So if you sign up for the annual premium membership, you get a bit of savings as well, but you also get access to the automatic copy trading, which again, I've just recently started. We don't know yet how this will perform, but in the last 2.5 months on my private account, it did pretty well. And very long term with borrowing and lending platforms, it also did pretty well. I can't guarantee that it will continue to work in the future, right? Prior returns are no indication of future returns, as people say. But in general, I try to get the odds in our favor. Right? When everybody dumps on retail, we can still profit from that if we set ourselves up accordingly. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.